Escalation of trade tension between US and China and widening of Russia-Ukraine conflict weigh on sentiment. Despite a strong fourth quarter GDP show, metals and consumer durables are big losers, while realty and FMCG eke out gains.
China's ban on rare earth magnets will start to hurt EV output in the coming months and may even lead to a production halt if not resolved, says TVS Motors MD Sudarshan Venu. He wants India to develop its own EV ecosystem.
Stocks of food and soap players like Britannia, Godrej Consumer and HUL perk up in trade on a cut in import duty on edible oils from 20% to 10%. The reduction in prices may hurt AWL Agri and Patanjali Foods.
Stocks of steel and aluminium makers take a dip after US President Donald Trump doubles tariffs on the metals to 50%. The souring of trade relations with China only adds to concerns.
India's GDP data springs a pleasant surprise. Growth in Q4 accelerates to 7.4%, the highest in a year. Growth in FY25, which is at 6.5%, is the slowest in 3 years, but in line with the government's estimates.
Very good afternoon. You're watching a halftime report live from the CNBC-TV18 Motilal Oswal studio. I'm Ekta Batra and with me is Mangalam Balu. Well, it's turning out to be a session where it's definitely a mixed start, Mangalam, to the week. You know, we have the Nifty as well as the Sensex, which is under pressure. But the mid-caps are showing some amount of resilience at this point in time. So the mid-cap index is faring a little better with a gain of around 0.2%, but definitely come off the day's high there as well. It's a lot about specific stocks in today's trading session. We have stocks in focus such as Apollo Hospitals reacting to what would be a massive capex plan that the company is planning going forward. We have Vodafone Idea, which is responding to its numbers. Nykaa as well, which is in focus on account of that. Ipca Labs as well as AstraZeneca from the pharma MNC space. That stock has spiked up around 12% post its Q4 numbers. So it's an active screen, you'd have to say, in terms of specific stocks, but we could be wanting more when it comes to the frontline indices. Hi, Mangalam.
Hi, Ekta. You know, there are a couple of silver linings that we're seeing in the frontline index as well. The Nifty is currently down by about 100 points, which implies that it has recovered nearly 125 points from the lows of today's trading session. The range that the street was working with in terms of support coming in at around 24,500 has played out in today's trading session. There are more number of stocks which are advancing than the number of stocks which are declining, even though the share is split right down the middle, but still marginally higher on the green line versus the red line. And we have the Nifty Bank, which is outperforming as well, just under the flat line right now as we speak, telling you that domestic data isn't as bad. In fact, it is fairly good. We have the PSU banks doing a lot better. What the Nifty has been buoyed lower by is the Nifty IT as well as the metals pack, which of course is more export facing. But the important news that took place over the weekend was the one that came in from the pharmaceutical space, Ekta, the one that the Delhi High Court has restrained pharmaceutical companies like Dr. Reddy's and OneSource Specialty from selling semaglutide in the domestic market.
Yes, absolutely. So that's the big news which, took place over the weekend, or rather on Thursday, Friday, and it sort of made the circles and made news over the weekend. Like you mentioned that, now what is taking place is that the Delhi High Court has restrained Dr. Reddy's and OneSource from selling semaglutide, which is obviously the blockbuster weight loss and type 2 diabetes drug in the domestic market. Now, the order is in lieu of a patent infringement suit, which was filed against Dr. Reddy's and OneSource by Novo Nordisk. Novo Nordisk alleged that Dr. Reddy's and OneSource are importing large quantities of semaglutide API into India to manufacture and export formulations, and the Indian Patent Act basically prevents making, using, offering for sale, selling, exporting or importing of the drug. The court, however, interestingly, has not barred Indian companies from manufacturing and exporting the drug. The next hearing is on the 19th of August, and it's going to be something that the street is going to be watching quite closely, because remember that Canada goes off patent on the 26th of Jan. Or rather in January 2026, and hence it'll be important to see whether these two companies can continue manufacturing for at least the Canadian markets. To discuss this from more of a legal standpoint, we have with us Rajeshwari Hariharan, who's the counsel at the Delhi High Court, joining in. Rajeshwari, hi, thank you very much for taking the time out. If you could just start by giving us a basic brief of the case? Okay, I think there's been a little bit of a disconnect. But, Mangalam, a couple of key things which emerged from the details of this case is that generally you have this confidentiality in terms of who is your API supplier or who are you supplying to in terms of a client. So now we know that Dr. Reddy's and OneSource have signed a contract, and both of them are in the race in some form or manner. We also know that OneSource has multiple other customers when it comes to semaglutide. So Dr. Reddy's being one of them gives you a sense in terms of the kind of customers that we can probably expect OneSource to have. Separately, like I mentioned, the big question is about manufacturing for exports. While domestic markets is important, the point is that on the day of the launch of a domestic market for semaglutide, you will at least have 25 companies launching the drug. And you will at least have a price erosion of 75% immediately. So the real money is not really in the domestic market. It is an ancillary market for many of the companies. The real money is probably in the Canadian market, which is one of the larger markets after North America. So that is going off patent in Jan of 2026. And once that goes off patent, that's where, companies such as Dr. Reddy's and others would probably look to launch. But nonetheless, we do have Rajeshwari back with us. Rajeshwari, I hope we've got you back on a better line. Thanks very much for taking the time out. If you could just start by giving us a brief on this case.
So, as you said, this is a case which is filed by Novo Nordisk against Reddy's and OneSource. And in this case, Reddy's has accused OneSource and Reddy's of patent infringement. Semaglutide is a drug which acts on the body and helps the pancreas to secrete a lot of insulin at the right time, and therefore you are able to do weight loss. So it's a very, very important drug for weight loss, and this product is not yet available in India from any of the generic companies. The main patent is set to expire in March of 2026. But before that, the patent expires in Canada in January 26. So therefore, all eyes are on the Canadian market. And therefore, it's the aim of all companies to keep exporting the drug. Now, if you go and see the order which is passed against Reddy's, when the matter came up, I think Reddy's just gave an undertaking that they will continue to export the drug because they've just recently got the license to export the drug. They are already manufacturing the drug from around April of this year, the April of 25. And therefore, they are permitted by the court to export the drug. However, they are not able to sell the drug in India. They can only manufacture and keep it, which means that eventually, when the patent expires in Canada in 26, they will be able to launch the product because in Canada the patent, the patent will be off. And similarly, in March 26, when the patent is off in India, they would be in a position to launch. They already have sufficient material which they can eventually launch in India.
So that
other patents of semaglutide, they all go up to 2040. But the important molecule patent will go off in 26.
Okay, all right, got it. So the two important molecule patents will expire in 2026. Now, the key point is, like I was telling Mangalam, Rajeshwari, there will be multiple companies that will launch in the Indian market in March 2026. So the real game, or the real money rather, would be to launch in the Canadian markets. Does this order in any way prevent manufacturing for the export markets?
So for the other players, there are two buckets. There are two different kinds of situations. So if there are players who are already manufacturing the drug, they probably will be in the same position as Reddy's. For those who have not started manufacturing at all, I think Novo will come to the court with a fresh case, and maybe the court will injunct them from manufacturing at all because they haven't started manufacturing as such.
Okay, so What I mean to say is, will Dr. Reddy's and OneSource be able to launch in January 2026 in Canada?
I think they will be able to manufacture and put it in Canada in 26 because they are now allowed to export. They're already allowed to manufacture. So they can use the product in order to sell the product in Canada.
Okay, all right. What about, the other companies now? Like you mentioned, is that a question mark? Will Novo Nordisk move against any other company which could be already manufacturing and preparing for its launch in Canada simply because it violates the Indian Patent Act, considering that you're manufacturing in India right now?
Yeah, sure. So I do expect Novo to move against the other companies as well. They will file a case. I mean, they should be filing a case against other companies who will be violating the patent. And if those companies are already manufacturing the drug, then they will stand in the same position as Reddy's. However, if they are not manufacturing the drug as yet, and they just have plans, they may be barred from manufacturing this in toto until March 26. Because in India, manufacturing by itself is an act of infringement.
Okay, so manufacturing itself is an act of infringement. So that means that maybe this case is yet not closed. There could be an appeal filed by Novo Nordisk. There is another hearing on the 19th of August. Is this a precarious situation for OneSource as well as Dr. Reddy's at this point?
Absolutely. It's a very precarious position because this order is more tilted towards Reddy's and OneSource. It permits them to stockpile the drug, which I am very sure that Novo will not be very happy with. The whole idea was to prevent them from manufacturing and to prevent them from exporting the drug because both are acts of infringement. And this order has not achieved that effect.
Okay, all right, Rajeshwari. Well, this is definitely an evolving story, so we're going to get you back on as and when the developments take place. So that is, however, important news, important perspective coming in on this important court case, which we will be tracking. Rajeshwari, thanks very much for joining in and giving us all of that perspective. Well, the next hearing is on the 19th of August. It could be a situation to watch for OneSource as well as Dr. Reddy's, and whether or not they could continue to manufacture for export markets. As of now, it seems as they can. But what happens going forward from Novo Nordisk's side would be something that the street would be watching quite closely. Well, we need to take a short break. But while we do that, this is important news. We're excited to unveil our brand new global business news channel, the all-new CNBC-TV18 Prime, bringing you insights from policymakers, business leaders and economists shaping both the world and India's future. CNBC-TV18 Prime decodes global shifts and their impact on Indian businesses, giving you unparalleled insights. Tune into CNBC-TV18 Prime at 12 noon for the Global Reset and Global Lens at 8:30 p.m.
Welcome back. Now the Nifty is moving closer towards the 24,700 mark. So the recovery continues for the market from the lows. As we speak, a couple of stocks which are doing well include the realty sector. So the realty index should come off you. That's at the high point of trade, and that's led higher by DLF, Godrej Properties, Macrotech Developers, all of them spiking right now. So the realty index was one of the few that was actually doing well in today's trading session, and that continues to accelerate ahead even as we see an up move in all of these names. Let's go across to Nigel now, who's in conversation with Neha Manpuria, who is the Senior Analyst, India Pharmaceuticals and Healthcare at BofA Securities. This from the sidelines of the BofA Securities 2025 India Conference. Nigel.
Well, thanks a lot for that, Mangalam. I'll take the discussion that you all were having ahead on the pharma space itself. And Neha joins us on the show from the BofA conference. Thanks a lot, Neha, for joining in.
Thanks, Nigel.
Well, most discussion points nowadays revolve around President Trump. So let's start off with that first.
Sure.
You know, what's the probability that we see Trump's tariffs on generic drugs? And as of now, what is the street ready for? What have they factored in terms of the numbers ahead?
So you're right. Obviously, a lot of discussion is around what President Trump would do on tariff, non-tariff, actions on pharma. Now, sticking to tariffs, I think there are a couple of things that we need to keep in mind. One, remember that there's an official 232 investigation that the U.S. has launched to understand the national security risk of having so much dependence on countries outside of the US. So I don't think the idea of tariff for pharma is as much about revenue potential for the US government. I think it's more about national security, that you have dependence of antibiotic drugs or basic drugs on other countries. So I think the way this could go down is probably you could have tariffs for different countries. It could be different for branded and generic, or it could even come down to companies based on whether you have manufacturing in the US, how much manufacturing that you have.
Yes.
Probability, I mean, you must have heard most Indian companies, everybody's expecting some action, probably June, July, based on our US healthcare policy analyst as well. They believe that, you'd probably hear something around this, in the near term. Your second question, what the street is prepared for.
Yes.
I mean, we have seen the street recover, especially the pharma stocks recover after the initial knee-jerk reaction when the tariff noise, started.
Yeah, the tariff is no longer scaring them, at least as of now, because the dips get bought into. But what are they penciled in?
So from a stock price perspective, obviously you're building in no tariffs or very little tariffs.
Okay.
I think it also, for generics specifically, there is a lot of discussion about how the margins for generics, particularly your commodity generics, are very low, probably less than 15% for your commodity generics. So if you have even a 10% tariff, you don't have that much room to make money. So that could lead to discontinuations and shortages in the US.
Yes.
So there is a lot of discussion about particularly for commodity generics, do you pass on that tariff to the distributors and the wholesalers who capture a larger portion of the value chain of the profitability in the generics. And I think that's why that low or no tariff scenario, that even if, let's say, there is a 10% tariff, you probably are able to pass that on, which limits the earnings impact for pharma companies that are focused on the US.
All right, so a 10% tariff could be digestible by the street, at least as of now. Something above that could be a bit of a shock, and it could be viewed negatively.
I think more than being viewed negatively, it's also about the repercussions it could have on the US pharma industry in terms of price increases because you have to pass it on, or drug shortages because you see exits.
All right, but what kind of strategies can Indian pharma companies adopt to try to digest these US tariffs? We must be having a couple of aces up our sleeve, right? If you could tell us the way out.
I think in terms of options, obviously the straightforward one is setting up more capacity in the US, but that takes time.
Yes.
It does not happen overnight. It will take you 24 months or more to get that facility up and running, get all the approvals, do the site transfers, etc. So it's not an overnight thing.
Yes.
Then there's also the question of, okay, I produce these drugs in the US which are higher priced, but who buys those drugs? So you need to have the government saying that, okay, I will give you incentives to offset the higher cost. So that's one. The second, like I mentioned, is the pass-through.
Yeah.
You have your wholesalers and distributors who are making more margins, so you pass through part of that impact to them, through higher pricing. So there are options, but I guess it will all boil down to what's the tariff, your discussions, the discussion that companies have with the customers as well as the regulators in terms of what incentive they're ready to provide to actually set up a facility in the US.
Okay, all right. Interesting times then. Let's come back home then. Let's talk about the hospital space. You have the Adani group that's announced their plans that they want to be part of the hospital industry. For my core sector, cement, I've seen them come in there.
Yeah.
People thought it'll be very, very disruptive. May not be as much as what we anticipated. Now, given that they're looking to get into the hospital chain or the industry, how do you view it? Is it positive for the industry? Is it a big risk that someone is coming with that much of muscle power? Your take?
I think, Nigel, we have to remember here that details are very limited on that announcement. I mean, what we have heard is probably a few hospitals in Mumbai at the moment. And given that both of us are from Mumbai, we know that we need more hospitals, right? And even more so when you go to tier 2 and tier 3 towns in India. So I think demand is not a problem. Obviously, the question is, how much of this capacity actually comes through? Where does it come through? So, if you look at the Mumbai, micro market, there is need for more organized chain, and you're seeing that by more and more companies announcing capex plans here. Yeah. So, again, we'll need to see timelines of this expansion. Do they have a larger plan in place? So this is just a one-off, announcement that they've made. Limited details to actually, give any color.
So we'll have to wait to hear from the Adani group itself. But I'm just looking at, we've been speaking to a lot of companies, a lot of the hospital groups in the past quarter, say in the month of May itself. And a lot of them, one pressing point besides the profitability, etc., was that we are setting up high number of beds. We know the scope for penetration is huge here in India. But if you see high number of beds coming in, will it limit their profitability? EBITDA per bed could take a bit of a knock. Margins could pull back a little bit. How do you view this play out?
I think this is one of the big discussion points when it comes to hospitals. You're going into expansionary cycle for the industry as against the last few years, which has been about consolidation phase, right? You've not seen as much bed expansion. Again, here, a couple of things. One, if you look at bed expansion, it's again focused on a couple of markets. You're seeing more in Bangalore, Delhi, Kolkata, probably Mumbai. So it's not like there's bed expansion everywhere. Second, it's staggered. A lot of the bed expansion has been announced. That's capacity numbers. If I'm announcing a 300 bed capacity, does not mean I switch on 300 beds on day one. So you try to calibrate your bed addition to limit the impact that it would have on margins. Third, there are also specific companies that have announced brownfield expansion, where your incremental EBITDA tends to be much higher than versus the pure greenfield. So I think we also need to look at those nuances. So if you actually then come down, you probably don't see a very large margin impact, at least for the next 2 years for the entire sector, because of how these bed expansion is planned, and also from the recent experiences in terms of how commissioning of the new bed has been done. It's been more calibrated versus all in one go.
So you don't see it as a big risk. There are a lot of queries about this, but you don't believe, at least as of now, it will be done in a staggered manner, and you don't believe it's that big a risk to the hospital.
That's correct, at least for the near term.
Well, Neha, thanks a lot for joining in. We'll keep in mind, tariffs up to 10% could be digestible. Something more than that could be a bit negative. A lot of supply coming in there. We'll wait for Adani's plans with regard to the hospital chains. And also you believe that the fresh supply that's coming in there may not be very, very negative for the profitability. Thanks a lot, and wishing you all the best for the conference. Well, guys, that's it from Neha with regard to the pharma and the hospital space. Back to you guys in the studio.
Okay, all right. Thanks, Nigel, for that. Definitely a rare space when it comes to pharmaceuticals. Neha Manpuria of BofA there. We need to take a short break with the news that we have some amount of pressure in terms of the Nifty, but no accelerated losses at this point in time. In fact, we have the Bank Nifty, which could probably turn a little into the green as we speak. Mid-cap index still holding up with a gain of around 0.3%. We'll take a short break. Sudeep Shah from SBI Securities will join in with some trading calls.
Welcome back. You're watching us here on Halftime Report. Let's take note of how the market is behaving right now at midday when it comes to the F&O pack. If you look at the indices today, it's the Nifty, which has seen a massive recovery, almost 150 points from today's low. And that's led by some recovery that we've seen from the lows in the IT pack. Metals are under pressure still, but the Nifty Bank is doing fairly well. The other indices that are doing well also include the likes of FMCG, which is powering the index ahead, and we have the broader markets which are outperforming too. However, even as the market recovers from lows, we still are not out of the woods. That's what the India VIX is suggesting, up around 6.5%. But option writers are fairly active at 24,600 for both the call and the put. Around 200 rupees for the 24,600 put, telling you 24,400 comes the support. But at the same time, 24,600 call equally active for a premium of 250 rupees, telling you around 24,850 you would see some bit of supply coming by. A lot of stocks in focus. We were speaking about how PSU banks are doing well. PNB, Union Bank seeing long positions being added. Godrej Consumer from the FMCG pack doing well as well. A couple of these capital market plays, CDSL, CAMS, are also seeing a fair amount of short covering. And we have long unwinding in names like Nykaa and IIFL Finance. So that's something that we'll watch out for too, Ekta.
Okay, all right, Mangalam. Thanks very much for that. We now have Sudeep Shah from SBI Securities who's joining in with his call on the market. Sudeep, hi, welcome to the show. Well, definitely a mixed picture this Monday morning. What would you recommend in terms of a strategy both for the index as well as specific stocks?
See, what we feel is that early morning profit booking today, which we witnessed in Nifty, was more of because of the 4 or 5 large caps that fell very fast in the first half an hour. But overall, if you see the broader markets, we've seen a decent amount of buying in the broader markets. And from a Nifty standpoint, 24,500, 24,550, we feel will act as a very important support zone. And markets at first, in the first few days, could be range bound between 24,500 and 24,800 with a positive bias. And about 24,800, we feel that this rally would extend up to 25,100, 25,200. And within both the indices, we feel Bank Nifty is more stronger with 55,200 possibly acting as a support. Until this support zone holds, we could see this rally in Bank Nifty going up to 56,300, 56,600. Couple of stocks are on our radar. The first one being CAMS. Now, we've seen these capital market participants showing good traction, CDSL having moved 6-7%. But post CDSL, this stock CAMS, where we are seeing a decent action today, as well as the stock is now crossing its intermediate resistance of 4120, 4125, which was there in April. So from here, there's a good base building that has already happened, and the stock is headed towards 4400, 4550 on the upside, and can be bought with a stop loss at 4000 on the downside. The second stock that is there on our radar is Bank of Baroda. Now here, with all the PSU banks, within this particular stock, Bank of Baroda, there was a sharp cut till 215, but consecutively the rally also has been equally sharper. And if you see the weekly charts, we feel that this stock is headed towards 265 to 270 on the upside, and can be bought with a stop loss at 246.
All right, Sudeep, thanks a lot for that. Those are a couple of stocks. Just keep an eye out on Tata Motors, though. Tata Motors' stock had been slightly under pressure on account of, the weakness that we've seen in their monthly numbers. But last few minutes, there has been a bit of a spike, and that's perhaps on account of commentary coming in from Bloomberg. The commentary is attributed to Bloomberg. It's coming from the minister saying that Tesla may perhaps not be looking at manufacturing in India. If that were to happen, then that is competition positive from Tata Motors, because the news of Tesla's entry into India had sent some selling, or had set some selling in Tata Motors. If that is not happening, then it would be positive for Tata Motors. But take a short break. On the other side, we do have the management of Greenlam Industries joining in to discuss their fourth quarter numbers. Stay with us. Welcome back. You're watching us here on Halftime Report. Greenlam Industries reported a tepid set of fourth quarter numbers. We are now joined by Saurabh Mittal, who's the MD and CEO of the company, joining in. Saurabh, it was expected that way, largely because, one, the environment wasn't fairly conducive. Secondly, margins were compressed, and the net profit obviously was buoyed down by other expenses, higher depreciation, higher finance costs on account of your, particle board plant that came on stream during this quarter as well. The question is FY26. As you stand right now at the start of this year, what are your targets for this year when it comes to revenues and margins across all your verticals?
So for FY26, we should be looking at 18 to 20% of top line growth. And laminates obviously is our core business. So we expect growth coming across all our verticals: laminates, veneers and allied, plywood, and particle boards. So all the businesses should do well in FY26. Particle boards, our sense is, we probably will still have some EBITDA losses in FY26. Plywood, we should have reduced EBITDA losses. Even in FY25, sales have doubled over FY24, and EBITDA losses have come out. And laminates, we expect improvements in margins. And veneers and allied categories also, we expect improvements in margins.
18 to 28% growth is something that you started out FY25 with as well, right, and eventually ended up doing 11.4%. So gives you the confidence this time around that it is a little more achievable than what it was the last year?
So you're right. FY25, we started out with 18-20% top line growth, and we ended up with about 11.4%. So clearly, in the second half of FY25, growth did slow down. I think in H1 we were running pretty okay, and also the particle board factory got delayed by a few months. That also added to the initial guidance or expectation revenue growth, and which didn't materialize at a later point. So as far as this year is concerned, all our factories are up and running. The chipboard factory has started in Andhra Pradesh. At least we are free from the manufacturing side. The entire focus will be on building sales and building revenues for the business. In FY25, we also opened several international subsidiaries. We expanded our warehouse in certain European markets. So I think last year, despite the challenges, even at 11.4%, 11.3% growth, I think we've done well versus the market. We've done that. We've grown the business. We've nearly maintained gross margins. We have had some reduction in EBITDA margins. We've maintained price points. We've maintained working capital discipline. Our debtors periods have been under control. Our working capital days have come down. So just I think with the efforts we've taken last year on building markets, building products, having the factories up and running, we seem confident to be able to achieve 18-20% growth in FY26. That's how it looks right now. Yeah, but our effort has been to maintain that growth over several years.
Okay, all right. Saurabh, you did mention for your plywoods business, your losses would be lesser.
That's right.
And for your particle boards business, the pressure is probably going to still continue. Right. So can you just give us a sense in terms of the EBIT? What will we see in terms of losses for both of these businesses separately?
Right. So I can't give an exact number, but clearly plywood in FY25, we doubled sales. And we expect good growth coming in FY26 also. And EBITDA losses should come down. Particle boards, break-even comes at nearly 50% utilization. And our sense as of now is that we may not be able to achieve 50% utilization in FY26, although the first 2 months, things are going in a good direction in the month of April and May. So I can't give an exact number because it depends on how things pan out in the year. Where do raw material costs, end up with? But clearly, the volumes and the business will grow, but EBITDA losses will be there. That's our sense in particle boards.
And on veneers, you did about 5.4% in the previous quarter. The fourth quarter, that came down to about 3.8%. Right. You've said that steady state volumes or margins in this business could be around 10 to 12%. Right. By when do you reach there?
So, I never used to do that the earliest. So last year, clearly the EBITDA losses, came down across verticals. The door business grew last year. The flooring was growing very well in the first half of the year. Second half of the year, it kind of slowed down. So obviously, we're not losing any money anymore in that business. So there is complete attempt towards building the business to that 10-12% EBITDA margin levels.
Okay. You do have debt which is fluctuating between around 950 odd to 1,000 odd crores.
That's right.
Give us a sense in terms of where that would probably be by the end of next fiscal.
So our sense is on the debt side, we probably will be in a similar band, maybe a bit lower than what it is right now, because we still have certain capexes to be completed of the new plants. And with the expanded revenue, we might have some working capital investment also coming in, assuming we grow 18-20%. So our sense is it'll be plus minus maybe 50 crores, 75 crores. So maybe slightly on the lower side, obviously, more minus than plus. Yeah.
All right. And what about working capital days? You've managed to improve that to about 55 in the end of this year, by the end of this year.
Right.
Is there any more room here, or do you think this about 45 to 55 days is what is a normalized level for you now?
So it depends on where our volumes kind of reach out. Our sense is the more we sell, the better we collect, because the debtor period is about 22 odd days. And as we expand, as we kind of settle our new businesses, there could be some more improvement. But my sense is this year, we may not see much improvement coming on the working capital cycle. I think we'll be able to hopefully maintain, the 55 odd days, maybe a few days here and there. So I think it'll take some more time for us to really give you a clear picture on where the working capital days can be. But our attempt always has been, to run a very disciplined working capital model with controlled inventory, controlled outstanding.
Is any further capex on your mind right now? Because FY25 was close to 2,500 crores. I suppose even if you do 20%, the next year you get to about 3,000 crores. You said that peak revenue potential for the company is 4,000 crores. So maybe by FY28 you will be running out of capacity. Have you planned for that?
So on the revenue side, with the investments we've already done, we can achieve about 4,000, 4,200 kind of revenues in the business. On the capex for FY26, we'll just be completing the open capex we have in Andhra Pradesh and Tamil Nadu, and some routine capex we'll be needing, in FY26. As we move ahead to FY27, 28, we've said that in the past we have opportunities to do multiple brownfield expansions in our Gujarat and Andhra Pradesh factory as far as laminates is concerned. For chipboard, I think we have 2-3 years of capacity available till we reach a certain utilization level. For veneers, etc., also we don't need more capacities the next 2 to 3 years. So really, I think as we see things now, for FY26, our plans are more or less clear. Moving ahead, as far as laminates is concerned, we can do brownfield. For other categories, you are aware that we have a large piece of land in Uttar Pradesh. So that probably, at some point, we'll think of on when we can start to work there, but not in FY26.
Take that point. Thank you so much for joining in, Saurabh. Wish you good luck for FY26, and hopefully you do get to that 18 to 20% revenue growth as you've guided for the start of this year. Unfortunately, you couldn't last year itself. But with that, we'll simply do a short break. As we do that, here's some good news for our viewers. The India business news leader, which is CNBC-TV18, is now just a click away. It is on the new app, the CNBC-TV18 all-new app, which gives you instant access to breaking news, in-depth articles, and financial world updates, all of them at your fingertips. You can download the CNBC-TV18 app from either the Apple Store or the Google Play Store, or just scan the QR code, which is up for you on the screen.
Welcome back. Well, restriction on rare earth magnets could bring production to a halt, says TVS Motors MD Sudarshan Venu. He also adds that there could be cost increases for the customer. In fact, our colleague Parikshit Luthra caught up with Sudarshan Venu and began by asking about their EV roadmap and how they plan to navigate the rare earth magnet crisis. Listen in.
We are committed to building all segments in EV that we believe make sense. And so we have the TVS iQube, which of course has done well. We have now started retail of the TVS X, which is sort of a flagship scooter, which shows the capabilities of what we can do in terms of technology and materials and really creating a fantastic riding experience. And you're resonating with the young customers in terms of connectivity, in terms of use of advanced materials, in terms of design. We're also launching another electric scooter this year. And we've done the One Make Electric Racing Championship and also the electric three-wheelers and electric bicycles as well.
Okay, so if we were to ask you how many electric products altogether in FY26?
I think in FY26 we'll look at a couple of new launches. One is, of course, X has already started retail. There is an improved iQube and one more new scooter.
One more new scooter coming up. How does the market look to you currently, and are you looking at increasing capacity? What is the monthly run rate that you're looking at?
I think we are increasing capacity and the volumes have grown. At the same time, now there is this whole supply chain challenge in terms of China banning the export of rare earth, high rare earth HRE magnets, which are actually very important for our motors and other parts of the EVs. So this EV supply chain disruption is certainly going to pose a short to medium term challenge. And I think as India plans its EV strategy and EV plan, the adoption will have to be phased in or phased up, along with developing an Atmanirbhar supply chain in India, where India, as the world's leading two-wheeler market, which has produced 3 of the top 5 companies by volume globally, has its own supply chain, its own R&D, its own capability, and EV is really built on that basis.
Right. How badly is the restriction by China on supply of rare earth magnets impacting TVS Motor Company right now in terms of production?
I think in the short term it will impact the entire industry a fair bit. As we go forward, we have to develop new solutions, develop new components, new suppliers, and really work our way through this.
So is it already for the industry? Is it already showing on the monthly numbers?
I think it'll start showing soon.
It'll start showing soon.
Maybe in June, if not definitely in July.
No, some bodies have really sounded the alarm bells, saying that this could literally bring EV production to a grinding halt. Would you go to the extent of saying that?
It is concerning. Yes, Parikshit, it is concerning.
It could bring it to a halt?
Yes.
How bad is it for the industry?
I mean, a halt is pretty bad, right?
A halt is very bad.
And it doesn't get that much worse with it.
Yeah. So we could look at a complete...
Yes, it is a significant challenge.
And how are you managing it?
Of course, like every company, we are trying to see how to deal this. But again, there is a huge price impact which ultimately has to be borne by somebody. And then there'll be cost increases or other price increases to the customer. So all this has to be factored in, which is why I think it will be a short to medium term challenge that the industry needs to work its way out of. On one hand, we are launching products, we are committed, we have invested a lot of capex. You have seen that we have done a lot of exciting launches and our volumes have also grown. This is definitely a challenge that there's an industry and we have to work through, and over a period of time develop an ecosystem of components and R&D in India so that we bring volumes up in a way that is sustainable and in a way that's Atmanirbhar and made in India with Indian R&D, with Indian products and Indian technology and supply chain and natural resources all linked up.
Yeah. So you're expecting from June onwards it will start showing in production figures, and there'll be very significant production cuts?
Yes, there'll be cuts.
Yeah.
Okay, and you can catch this full exclusive conversation today at 5 p.m. only on CNBC-TV18. Time for a short break, but on the other side, Manisha Gupta joins in with Kunal Shah from Nirmal Bang. Welcome back. Well, for the markets, it's picking up a little bit of pace for the mid-cap index. So it's up around 0.5%, you would have to say, for the mid-cap index. Even the Nifty, in fact, has flattened out a little bit. So maybe it's showing some signs of probably turning into the green, just about lower by around 22 odd points. I just want to point out AstraZeneca. We spoke about it briefly some time ago. That stock is up around 11.5%, doing well on the back of its Q4 numbers. If you just look at the numbers this time around, it's been a huge turnaround on a year-on-year basis. Revenue is up 25% year-on-year. EBITDA is up around 74%. Margins have improved to 18% versus 13%, and a profit growth of around 47% year-on-year. So that's what's the performance like for AstraZeneca. Sequentially as well, there's been a good jump in terms of the profit and the EBITDA of around 12% year-on-year in terms of absolute terms. Remember that there's some positive news globally also with regards to AstraZeneca's drug, one of their cancer drugs globally, and that could have a possible positive ripple effect on the Indian stock as well. And that's probably giving it further momentum in today's trading session, 8,891 odd rupees for AstraZeneca. But let's go across to Manisha Gupta now. She's tracking the commodity space for us. Manisha.
Thank you so much for that, Ekta. And joining us on the show now is Kunal Shah from Nirmal Bang. Kunal, hi. And the markets seem to be really reacting to the weekend news, really, where the President Trump has spoken about increasing tariffs on aluminum and steel effective 4th of June. And this is up by nearly 50% right now. The immediate effect has been that we've seen prices decline for aluminum and steel both. How would you look at the near term? Is this a knee-jerk reaction? And how would you look at longer-term implications for this?
Okay. I think Kunal Shah is joining in just a bit. But Manisha, in the meantime, if you can just give us an update in terms of the commodity space and what you're tracking today.
Well, metals really, Ekta, because this is an area that the street did not see coming. Perhaps 25% of a duty is something that aluminum and steel both have seen already. The expectations really have been that as the tariff conversations go, we'll perhaps see this also easing off in the next 3 months or 90 days therein. But what we have seen instead is that you've seen the duties go up from 25% to 50% at this point in time. So there is a price decline that we have seen. If India, or rather if US is looking of producing more of aluminum and steel going forward, then we perhaps will see China looking for other markets. Kunal is with us now. Kunal, so if US is going to be producing all of these metals, including aluminum and steel, where do you see China then dumping its metals?
Well, I think the kind of import numbers which, so roughly US imports are about 4 million tons of aluminum. And I think that number cannot be dumped across in the globe. Because if you see, barring countries like India, where the demand growth is very strong, in rest part of the world, the demand growth is in a single digit. So I believe going forward, China will left with no option but to cut the production of excess capacity and production of aluminum. So they have to weed out the excess capacity, because dumping, they know what has been the policy of India. We've seen in the case of steel, we've seen in case of aluminum. So if there is a dumping going on, I think the ministry is going to take a call. Even in case of steel, we have seen anti-dumping duty coming in. So if further dumping takes place, we will see the anti-dumping duty going up to the extent of another 10 to 15%. So I believe that the global market, ex-US, will witness surplus because of this. And that surplus had to be weed out by China by cutting their excess capacity and the production. So in a shorter term, there may be some glut building in the global economy. But going forward, China will left with no option but to cut production.
Kunal, in the initial conversations and statements as well, we saw a huge disparity when it came to LME markets and then again the US markets. Do you see a similar kind of scenario rise yet again?
Yes. See, in this kind of scenario, because of tariff, you take any commodity and there is a possibility where there can be a disconnection between the spot market and the futures market. That is the reality. Because when you talk about 50% tariff, what's going to happen if I'm going to need copper or I'm going to need aluminum? There is a shortage. So if I import it, I have to pay 50% tariff. Okay, so I will try to procure material before Wednesday as much as possible. So there can be a possibility that the spot market can get tighter in a shorter term, and you may see a big short squeeze also in futures. So that kind of scenario. So earlier, the prices were moving as per the traditional demand and supply scenario. We saw the similar thing happening in gold, where we've seen a big squeeze taking place. And because of the tariff fear, there was a mad rush in spot market to buy gold. Yeah, US market. So same thing we can expect going forward in case of aluminum. The automakers or the key component users of aluminum, if they want to procure the aluminum, because the capacity, US has ample of excess capacity in case of aluminum, okay? But to get all these capacities on stream and start producing aluminum and steel to the extent that their import is totally weed out, that's not going to be possible in near term. So I think there is a possibility that the spot market can get very tight before we actually experience the glut. So I'm not expecting a big crash in prices.
Sure. Kunal, how would you look at the Indian market impact? Of course, there are some companies that have reacted today with international exposure therein. But for Indian markets, does this mean anything at all? Or do you think there's going to be a minimal, if any, impact at all?
So first of all, we have to accept that it's a multipolar world, and this is going to remain. We are going to remain we are not going back to the globalization. We are going to remain multipolar. The geopolitical escalation across the globe has been rising. And now when you talk about the supply side shock, because of all this scenario, are going to be real. So as of now, I don't see any major impact on the Indian steel producers or Indian, because I think the policy of government is very clear. So whenever government has sense, there is a possibility also of a sharp dumping taking place in India in case of any metals. They have reacted quite swiftly. So they have taken 3 months, 4 months, but their stance is very clear. So even this time, we are not the major, the only fear India has is of the dumping. And I think that the ministry will take care of.
Okay, all right, Manisha as well as Kunal, thanks very much for joining and taking us through the commodity space. Well, we need to wrap up on Halftime Report. Stay tuned for more unmatched insights and unparalleled market coverage. Keep watching Nuvama presents CNBC-TV18 Market Central.